What if everything you needed to know about buying your first stock was laid out for you simply and clearly? No confusing terms, no overwhelming information, just exactly what you need to take your very first step. This is exactly what this video is because I know how it feels like to want to start investing but not knowing where to begin. Every time you search for answers online, you find information that are either too complicated, too American, or written for people who already know what they are doing. So today we are going to change that. By the end of this video, you are going to know exactly how to buy your first stock step by step, simply and honestly. So let's get started. The very first thing you need before you can buy any stock is a place to actually do it. And that place is called a brokerage. Think of it like this. If the stock market is like a large shopping mall full of companies you can invest in, the brokerage is the entrance door that leads you in. So without it, you simply cannot access the market. So what is a brokerage? A brokerage is a licensed platform that sits between you and the stock exchange and execute your trades on your behalf. According to the US Securities and Exchange Commission, every legitimate brokerage must be registered and regulated by the appropriate financial authority in its country of operation. So this is the very first thing you look out for when signing up for any platform. You want to be sure if this platform is regulated. And you can answer that question by doing a quick search on your country's financial regulatory authority website. And you are going to confirm that in few minutes. And this is going to save you from losing your money to unregulated platforms. Now, when you are choosing a brokerage, there are four things that investors.gov consistently recommend that every beginner pay attention to. And the first thing is regulation, and I explained that earlier. This has to do with you verifying if that platform is actually regulated. The second thing is fees. This needs to be verified because some platforms they charge a small commission on every trade you place. So it is important that you know how much you are going to be charged before investing. The third thing is available investments. You want to be sure that that platform gives you access to stocks and markets that you are interested in. The fourth thing is ease of use. As a beginner, you want to be sure that that platform feels simple and clear, not the one that overwhelms you the moment you open it. So you have to check, is this platform understandable? Can I understand what is written before I start investing? So once you have chosen your brokerage, the next thing is opening and verifying your account. Most regulated brokerage will ask you to verify and identify before you start. And that usually means you submitting a government issued ID and sometimes a proof of your address. And according to investors.gov, this process can take anywhere from a few minutes to a few business days, depending on the platform and your location. And this step exists to protect you and the integrity of the financial system. So it is completely normal and every legitimate platform will require it. So you just have to take your time and undergo the process of verification. Now, after verification comes funding. This has to do with you depositing money you want to invest. But before you do this, there is a principle that the Financial Industry Regulatory Authority, FINRA, makes very clear, which is never invest money you need for rent, food, or emergency because the stock market is a long-term wealth building tool and you approaching it with the money you cannot afford to lose in a short term is one of the most common mistakes that new investors make. So start with whatever amount feels comfortable for your personal situation. No amount is too small, but it's advisable that you invest money you can afford to keep for a long period of time. So with your account funded, you are now ready to search for your first stock. Most brokerage platforms they have a simple search bar where you can just type in the company name or its ticker symbol. And if you don't know what the ticker symbol is, I would advise you go watch my previous video because I explained all of that. Once you find the stock you want to buy, you have to look out for some informations. And as an investor, it is your responsibility to take your time to go through every information on the platform you want to invest in. And some of those informations are the current price, the 52-week high and low, the market cap, and the recent news about that company. What has been happening in that company in the past few weeks, in the past few days, in the past few months. You want to look out for all of those information. According to Investopedia, making an informed decision before placing any trade is a fundamental principle of responsible investing. So, as an investor, you don't have to get tired of reading, you don't have to get tired of going through informations on the platform. When you are ready to buy, you're going to place a buy order, and there are two types of buy order. The first one is the market order, and the second one is the limit order. What's the difference? The market order buys the stock at whatever current price it is at the time, while the limit order lets you set a specific price you are willing to pay, and the purchase only happens when the stock reaches that price. But for most beginners, the Financial Industry Regulatory Authorities (FINRA) advise that you place a market order on a well-researched company during the regular market hours. That is a simplest and a most straightforward approach to buying your first stock. After your first purchase is confirmed, remember this. A long-term investment research was done by Vanguard, and they came up with the conclusion that investors that check their portfolios less frequently and react less to short-term market movements have historically achieved better long-term outcomes. And I'm not saying this to assure you that the market will be stable. The market will obviously go up and down, but it is your responsibility as an investor to stay patient, stay consistent, because the stock market is a long-term wealth building tool. So it requires patience and consistency to build wealth over time. So in our next video, I'm going to be teaching you how to invest with a little amount of money, or what it takes to invest with a small amount of money. So stay tuned and anticipate. But before you go, I would like you to comment, like, and subscribe to the channel so you get notified when more educational content like this comes up.